This is going to be an emergency session for my subscribers and future subscribers. This is the Macro Ghost here, and I'm dropping alpha a day in advance of a serious potential market-moving event. Tomorrow, Wednesday, the Supreme Court of the U.S. is scheduled to drop the decision on Trump's massive tariffs, and the man himself just said on Truth Social, and I quote, "If the Supreme Court rules against the United States of America, we are screwed. We are staring down a potential $150 billion refund nightmare that could suck liquidity out of the system, freeze hiring even more, spike deficits, and send stocks into a tailspin. However, chaos equals opportunity, and in this breakdown, I'm going to unpack why a negative ruling will tank the market and exactly how to position yourself with shorts and or put options before the verdict lands. Buckle up. This could be the macro trigger of early 2026. Smash that like, subscribe, and let's dive in. I think the value add that you're going to get from me is that you're not only going to get my reaction to events that happen, that are happening or happened, and my analysis and my logic on both the fundamental and technical side, but I'm also going to try to stay ahead of the news and try to position people for appropriate outcomes. I don't know what's going to happen in the SCOTUS, in the Supreme Court. I know Trump has the numbers, but I know that the SCOTUS is pretty much unbiased when it comes to the law. So even though it could be a 6-3 or 5-4 count according to their political bias, it could very much swing 5-4 or 6-3 in the opposite direction or against Trump and his tariffs. Now, the reason why this is so important is that tariffs are bringing in significant income to the GDP. The GDP is growing. If these are declared illegal, Trump has said he has a backup plan. However, the initial shock of this illegality of these tariffs is going to present significant uncertainty in the market. That uncertainty drives prices down. And the reason why I'm coming at you a day in advance is because I want you to be prepared for that. Do I know prices are going to go down? I do not. Do I feel they could? Absolutely. Do I feel that they could go up? Sure. If that ruling comes in, and let's be honest, the ruling is expected to be a negative event, courtesy of Polymarkets, right? So I think it's like 75% to rule against him. So if the market's expecting that, but it's not really pricing it in yet in the S&P and the Dow, and it's kind of waiting for that event, we need to be ready for that, okay? So there's a few ways that we can get ready for this. First, let me go through this article before I get into that. Trump's most sweeping tariffs face a landmark test, as I said. Set to rule on it on Wednesday, was pushed back. The case is being watched closely as companies like Costco can bring lawsuits against the U.S. government in the hope of securing a refund on import duties if the court rejects Trump's authority to impose tariffs. So, the court heard arguments in early November. Both conservative and liberal-leaning justices asked skeptical questions of the method by which the president imposed his most sweeping duties. Trump imposed his tariffs by invoking a 1977 law meant for national emergencies. If you ask me, and I'm pro-growth, but if you ask me, are these tariffs illegal? Based on the Constitution, based on the law, I'd have to say they are. So that's why I'm preparing for this event. Even though I want growth and I want things to go up, I'm preparing for a terrible blow, which is what Trump said. And we're screwed, So he's putting high emphasis on this. He wants the decision, obviously, to favor him, but we have to abide by the laws, everybody. Besant says he thinks that businesses won't be passing those refunds back to customers. It won't be a problem if we have to do it, but I can tell you that if it happens, which I don't think it's going to, it's just a corporate boondoggle. Don't know that word. Costco's who's suing the U.S. government, are they going to give back the money to their clients? No, obviously not, right? Obviously not. So I might link this article here on this, and then now I want to jump into how we can take advantage of this as investors and traders. And now some of you might be more risk averse than others, so I'm going to be very careful on how I present this data, okay? The first thing I'm going to be looking at are the put options. And if you say, well, what is a put option? A put option is a bet against something. Like a call option is a bet for something, and a put option is a bet against something. And if you I can't really get into teaching you about how to price put options because that would just take a very, very long time. But as an example, if the S&P is 69.77 and you're betting that the S&P is going to go down to $200, $200. I mean, you can buy I'm sorry. Let's just get to put options. If you think it's going to go to $200, you can buy a put option and it has to go lower than $200. Now, that's not going to happen, so we're not even going to approach that. We're going to go to around the money price. It's called at the money, 69.77. And we're going to look at, 69, here's 69.77. And the price would have to go below, it would have to basically go to 69. What is the math on that? It's got to go below 69.50 because we're buying for $40 at 69.80. So it's got to go below 69.40. You catch that math? Because it's $40. So 69.40 is our kind of break even. So it has to go below that for us to start making money, okay? I'm not going to be interested in that because the volatility of the S&P is much lower than the volatility of Bitcoin, okay? I just wanted to show you that type of pricing. The volatility of Bitcoin is going to be way higher than the volatility of the S&P. Therefore, I'm going to be looking at either buying a put option on Bitcoin, depending on the time premium, the premium I pay. If the premium is too expensive, I'm not going to do it. If it's cheaper to buy the MicroStrategy inverse fund, the MSTZ, which I bought at, I'm going to show you in a second. I bought and then I sold. I bought it, I think, $8, sold at $15. I might buy back in. If it's cheaper, I'm just going to go with that. So if we look at the IBIT, this is the IBIT, iShares Bitcoin Trust, 5187 is the current spot, okay? So if Bitcoin goes lower than 5187, I'm going to be in the money based on my premium. Now, let's say I pay a $1 premium right here for $51. That means Bitcoin has to go below $50 for me to make a profit. Why? Because I'm paying $1. So it has to go to $49.99 for me to make a penny, okay? And that is like, 4%, is that? That's right, yeah, for like 4%. So I'm paying $100 because every contract has a multiplier of 100. So $1 times 100 is $100. And I'm going to start printing in the money if Bitcoin starts to drop below 5%. If it drops like 7%, I'm going to be more in the money than if I just shorted MicroStrategy. There's a multiplier on options, and these multipliers can enhance the return profile of your investment, but you can also lose all your money. How do you lose all your money? Well, if it doesn't go below 51. So if the news is good, and Bitcoin goes up, you only lose the $100. You're not going to lose more. There's people out there that's like, oh, I'm afraid to be short because I can lose everything. You can't if you're naked short. But if you're put option short, by buying puts, you can only lose the money you put in. So that's one way. All right, that's one critical way. And I haven't decided yet what I'm going to do. I'm probably going to err on this side because it's safer for me. In terms of liquidity, I don't have a bid-ask spread. You see these spreads are very wide, 76 and 80 cents, that's 4%. It's a 4% spread, right? Unless you bid and get hit on the bid, you're going to pay a 4% spread just to get in. Whereas in the T-Rex, the inverse, which is a 2x inverse, I'm not going to pay that spread. The spread's going to be a penny, which I like that. So I got in around ended October, November, like I would say $8, but maybe cheaper. I'd say like right here. And then I got out like right here at like 15.50, like when it wasn't making new highs, I got out. And that's just because, Bitcoin could do anything. I'm just going to take my profits. But now, looking at this chart, it's not bullish. It's not bearish. It looks like consolidation. You can maybe say there's a shoulder here, a head here, and that's maybe another shoulder put in. But it also can rip higher if the markets rip lower. So this is the bet I want to take. I could take the iShares, and I still might bid on that, or might take the offer on this one. I'm sorry, right there. There's the offer. I'm paying 4%. I don't like that. 4%. Maybe that 8%. It's near 8. It just, why, And then it has to be volatile. So it's just a hedge. So I'm hedging. I have upside exposure. I want downside exposure so I can hedge against my upside. I'll make on either way. If the SCOTUS rules in favor of Trump, markets rip, I'll make, and I'll only lose this. And if the SCOTUS rules against Trump, I'll make big on this, and I'll lose on my longs. So this is what I wanted to say today. And if anything is unclear, please ask. Like, subscribe, and comment your question. I will answer you almost right away if I'm awake. If I'm sleeping, yeah, you gotta have to wait. I'm in Asia, but I'm very interactive, and that's going to be it. We got options, we got put options, we got the MSTZ, the T-Rex, the Tyrannosaurus Rex, and we have an event on Wednesday that we are now prepared for because we've spent the time to go over the situation and the probabilities. Maybe if I go over to Polymarket here, let's do that. Let's see what we got. There you go, ladies and gentlemen. How many SCOTUSes rule in favor of Trump's tariffs? So the probabilities are at 4. So he's going to lose. 4 and 3. I mean, that's a loss. And the low probabilities here, there's a 24, 25, 26% chance that he's going to win because he needs 5. So 15, 24, 25, 26% chance that Trump's going to get the ruling. And we have to be prepared for that. And we are. We are now prepared for it. Thank you very much for tuning in to the end. And let me know what you think. And I will see you in the next video. Let's go.